Now, one question that I always get asked by my subscribers is, what dividend stocks should they buy, or what stocks should I buy? And the truth is, I really want to answer, but legally, I can't. So in this video, I have someone who can actually give you answers. Plus, they're going to tell us the top 5 high-paying dividend stocks of 2023. Thanks to JMMB for partnering with me on this video and for giving me their dividend expert. Now, speaking about money, let me see how my dividend stocks are going. Now, in my last video, I received $30,304.50. So good news, I got a little more to add to the pile. Now let's kick it off with Mayberry Bond Tranche 3, and they paid me $17,726.04 on July 12, 2023. Second is going to be another Mayberry Bond, and that's the Tranche 4, and they paid me $9,555 on July 12, 2023. Third, Supreme Ventures Limited, ticker symbol SVL. They paid me $1,486.50 on August 15. Next on the list are going to be my preference shares, and those are the JMMB 7.35%, and they paid me $581.25 on August 8, 2023. Fifth on the list is the JMMB 7.25%, and they paid me $892.66 on September 6, 2023. Sixth on the list is going to be dollar. They paid me $678.85 on September 6, 2023. And number 7, the big smoker boy, Carreras, he's back. He's going to pay me $2,961.43. Now that brings my total for the year so far at $64,186.23. Yo, the portfolio growing. Me soon reach 100 grand for the year. I can't wait until that happens. All who did not laugh at me, oh, you look a couple cents dividend, and you look a 10-cent dividend, you look $100. It's going to grow. It's going to get to a point where 10 years down the line, make $1 million a year, maybe even more off dividends. It's a good feeling. But anyways, I won't keep you any longer. I'm going to bring on the JMMB rep so we can get into the meat of the matter.
Good afternoon. I'm Clive Charlton. I'm employed to the Jamaica Money Market Brokers Limited Group. I'm based at the head office. I trade stocks. I'm the stock trader, and I also assist in portfolio management, the proprietary portfolio management of JMMB, equity portfolio management, I should say. I like to encourage persons to participate in the stock market. Why? One, we want to grow wealth. I like to expand it beyond the word money. People say want to get richer, want to get money. It's way beyond that. It really is supporting your entire lifestyle. It supports you in building and securing your future and your children's future. It helps you in, living a life based on what you desire, fear, comfort. I think that's what everyone wants. It also secures it that in case of eventuality, you have some investment to fall back on. And by buying stocks also, I think is the best proxy to starting your own business. Perhaps if you want to start your own business, you can start by buying stocks, not just investing, because when you buy stocks, you buy ownership in that company, and you're entitled to all the rights and privileges as dictated by the laws of the land.
All right, so basically what people show in the movies and what some people talk about on Twitter, you actually do this for a living. You're a trader for a living. So let's jump to the dividend part. So since this video is about dividends, and we have a lot of new viewers, the thing is, some of them won't actually know what a dividend is. So just give us a brief explanation of what are dividends and why do certain investors find it so amusing or attractive?
Many investors, when they buy stocks, we're looking for value. Anything in life is value. You buy a motor car, it must provide some value. You buy a house, it must provide some value. The value, largely, is the motor car is moving us around, making us more efficient and comfortable and safe. The house is the same thing. But also there's an additional value. When you buy certain type of assets, the expectation is that you can sell it back later at a higher price. So you have a capital gains. That's how your wealth grows. Okay, so you buy and sell, buy and sell. In fact, that's what many businesses do. Whether it's Carib Cement that puts raw material together to make cement and sell it at a profit, you own a piece of Carib Cement, it does what it does, makes profit. That profit now adds value to the company, okay? And the company uses that to further expand the business that it is doing, right? Same thing. So when we buy into this company, we are buying a piece of this company, and what we expect to get from this company is two things. The company ought to be continuously growing over a period of time. Companies will go through their fluctuation. It's normal. Everything in life is a fluctuation and a cycle, and based on different factors, right? Different reasons. So, but over the long term, we expect the value of the company to grow. We expect them to increase output, increase production, increase revenue, and therefore drive the value of the company. But when they do that, they also get profit. From this profit can be in the form of cash. They reward shareholders through two reasons. As the company grows, the value of the company grows, so you can sell it at a higher price and make what we call a capital gains. That's one. In the short term, in the intermediate term, we expect also, when we're waiting on the stock price to go up because the company is doing well, it takes a while for the company to drive revenue and grow. While we're waiting for that, the company, as it does business, generates profit and generates cash from this profit. And part of this profit is distributed as dividend. They retain some to further grow the company, and they distribute some as a reward to existing shareholders in the form of dividend declaration. This is cash that the company decides to issue to shareholders. So while you're waiting on the value of the company to grow, to sell it at a particular time, and realize your value, your gains, you are at the same time getting constant cash flow from the company, you see, because the company is issuing a part of that profit as dividend to existing shareholders, and that is done periodically. Of course, the company ought to be making profit. If you're not making profit and you're paying dividend, it means that you're depleting the resource of the company. That's not sustainable over the long term. So the company must be generating additional value each time. So some companies, and we perhaps saw it in the news, some have decided not to pay a dividend or to reduce the payment of dividend over a period of time. That is part of the constraint that some companies have now. But most companies have consistently paid dividend and are expected to continue to pay dividend going forward.
So now that we know all that, now we have a good understanding of what the market is, what shares are, and what a dividend is. How can an investor find good dividend stocks? What are the indicators, or what are the ratios that they look for in order to build their portfolio of some sustaining dividend stocks?
Both newspapers carry a page that shows the prices traded almost every day. They carry it. Look for it. And they also show the dividend paying stocks and how much dividend was paid over a period of time for the year. They also shows companies that have already declared dividend, that the management has met, or the board, and decided that we're going to pay 5 cents per stock unit dividend, and for those who are on record as at a particular day. How do we know? Well, it's a matter of tracking them over a period of time. The brokerage houses also, you can get information on their website. You can call the brokerage house and request that information, and they'll send it to you, email it to you, or refer it to their website. So there are various ways you can get it. Each company also, registrar of the company, will have information of the declarations of the company when they intend to declare how much they have declared in the past. On the JC website, where there's free information, you can find the history of dividend payment of a company. And that history is what we look at to have a fair idea of how much a company declares, whether they are a good dividend paying stock or not. So we may look at, over a period of time, this company has consistently paid dividend, the frequency of dividend payment, the amount of dividend payment. We may look on the company's dividend policy. When a company becomes IPO, usually they have a dividend policy, and they'll state that we will pay X amount of dividend out of profit per year. You can use it as a gauge to say this company, we expect it to pay consistently some amount of dividend. But mostly it's going back on the stock exchange website and looking over the last, I said 3 to 5 years, to see the companies that have paid dividend consistently. And you can reasonably assume that these are the companies that will continue to pay dividend going forward the same way. That's the way we determine a dividend paying company with a good dividend yield. The yield, what is the yield?
Yes, yes, yes.
Right. That ratio you spoke to. Anything you buy, you expect some return on it, right? So if you buy the stock for $1, and the same stock pays 5 cents dividend per stock unit, you bought it for $1 and you receive 5 cents dividend. The dividend yield is 5 over $1, that's 5%. If the company has declared dividend 2 times for the year, you receive 5 cents in the first half of the year, 5 cents again, second half of the year, but you bought it for $1, your dividend yield is 5 and 5, 10, 10 over $1, 10%. So over the years, we look at these companies, we look at the average price each year. So in 2020, 2018, 2019, 2020, 21, 22, right down to 2023 up till now, we look at the average price each year. We look at the amount of dividend they declared each year. We put that dividend over the average price for that year and we get the dividend yield. And then we rank them. The dividend they have declared over the average stock price, this is the dividend yield. And we use it as a measure to say what companies pays per cost the best dividend yield. So the higher it is, the better, usually.
So saying that, no, and I heard that you mentioned, I heard you mention a couple of stocks before. The real meat of the matter and why some people have their ears keen to this video is that they want you to tell them what are the top 5 dividend stocks so far for this year.
Now, let me look at some figures here. Well, it seemed to me I only have the dollar amount of dividends declared, but
Declared.
I can, off the bat, I can tell you, Trans Jamaica, Carreras, and Scotia Group are some of the best dividend paying stock. And that dividend yield ranges from about 9% between Trans Jamaica and Carreras to about 5.5%. Last time I measured Scotia, it was about 4.37. That time the stock price was about about $35, $36. It's now about 32, 33, right? So the dividend yield should be probably about 4 or 5%.
4 or 5%.
Right. Here's the thing. They had dipped, reduced their dividend payment somewhat earlier this year. Remember during COVID?
Yeah, they had to have financial institutions had to hold more cash.
Exactly. Now, many of them did it voluntarily, yes, but also the BOJ had asked them to hold on to as much cash as you can to shore up the company, the health of the company, right? So many of them had either stopped paying dividend payment, reduced their dividend payment, or for a while were not paying a certain percentage ownership. Of course, some companies know different condition. It's not COVID now, but it's a global environment of interest rate rising, which squeezes many of these companies. So some of them have sought not to pay dividend. So in other words, then rather than have let me not say that, you need to diversify your resources. You need to have, as they say in terms of portfolio management, you don't put all the eggs in one basket. So you need a regular savings account. We need invest in a fund, a managed by, for example, JMMB or any other entity. You should put somewhere where you don't manage it. You can buy your stocks when and where you want. Decide whether you want to move money from this investment account to that. But it's good that you have some money with the professionals. Okay, who are equipped to have all the information, right? So that's good. So diversification is key. And that way now you can really expand the potential for not just capital gains, but for dividend yield. Managed funds are good now. Well, you can buy stocks individually, but managed funds are good now because fund managers, they have all the information and they know what is selling cheaply now. They know what pays, has a good cash flow because they're doing their research. They have their researchers with them, and they can now determine what is best to buy now in order to get greater value in the long term.
We'll jump back to our previous question. You gave me 3. I want 2 more. So you gave me Trans Jamaica.
Okay.
You gave me Scotia and you gave me Carreras.
Yes.
And I want 2 more. Because so far, 2 out of the 3 is already in my portfolio. So that's so good.
Okay. Well, a company that was recently listed, whose stock price has not moved. It moved up to probably about $2.24, eased back down, and it keeps bouncing up and down. The fundamentals it came to the market quite cheaply when compared to, because it came on the tail end of the pandemic and during this new interest rate regime, right? IPCL that trades at Apex at $2, it has already declared a dividend. The yield, the last dividend it declared, the first and last dividend so far, it's young, just listed last year in November, a yield of 6%. I expect the price to remain more or less the same perhaps this year, But the results is financial results consistently. It has published financial results on the heel last for the first or second quarter. I think it's the first quarter, November. It produced financial results, showed profit going up like 26%. It has produced in February, March, April, May. It produced also about 3 quarterly financial results, and each of them has shown significant growth in revenue, in profit, in book value. The next company that has good dividend yield, I'm looking through Seprod and Grace. Have good dividend yield.
Yeah.
Yes, even though Grace is $76, it pays dividend at least 3 times a year. It has declared, I think it's about 50 cents each time. So that yield is probably about 2.5%, 2.4%. Seprod also has a good dividend yield, consistently pays dividend.
And maybe you can even look at maybe SVL.
SVL is a consistently good dividend stock at a price of about 26, 27. Yes, good dividend yield.
Trust me, anybody who is watching this right now, they basically had a master class in economics and accounting. So I really appreciate this, but it's sad to say that we have to wrap up the video now and come to an end. So if somebody wants to contact you or just start their dividend investing journey, like how can they get that done?
Okay, call JMMB. We're the friendly institution, very friendly, very customer focused, right? And our facility, once you open your account, which is quite simple and quite easy, you will not spend a lot of time in line or in office. Once you open your account, we have all sorts of electronic online facilities. Also, when you open an equity account, we advise you, do the dividend mandate, so your dividend automatically goes straight into your account. Again, one cook a full basket, and them said don't put all the eggs in one basket. And when you're buying stocks, you don't come in. If you have $50,000 investable fund, you don't come in all at once with that 50,000. 10,000 this month, 10,000 the next month. Why? Because prices fluctuate. Right? Yes, so I mean, if you can buy good quality stocks and hold them, fine. But buy stocks. It's the best proxy to owning your own business. And remember, you know, businesses, stocks are living entity, legal entity, meaning that the people who run these businesses are separate individuals who's managing their personal finance, but they are managing the business, and the business does what is necessary to ensure that the business survives. This is why business stock prices always beat inflation. Right now, stock prices are down because of the nature of business and how the financial climate works, but stock prices always globally beat inflation rate. So it means that in the next 2, 3, 4, 5 years, your stock prices will be way ahead of inflation. Buy stocks.
All right. Endorsed by Clive.
Good.
All right. So big up
and take care.
and take care. Yeah, man, no problem.
Good, brother.